All right, well, welcome back. Today we've got two experts with us to help you navigate your spending better. Janae Adams with Debt Sucks University and Nathan Grant with MoneyTips.com. So let's talk about some other financial pitfalls really quick. Janae, what is a financial desert?
A financial desert could be easily in a city where there are no investment firms, there are no banks, and so you have to get on a bus or you have to drive 10 or 20 minutes down the road to be able to actually talk to someone about an account or even opening an account. There are financial deserts all over the country, and those are usually in limited income type of neighborhoods, which makes it hard for those neighborhoods to become middle class and upper class because they don't have, just like food deserts, they don't have financial institutions to be able to help them create wealth.
Gotcha. And Nathan, tell us about personal loans. What's some of the pros and cons in using them to climb out of debt?
Yeah, so personal loans in general typically have lower interest rates than a credit card. So even though it's still taking on debt, you might be able to use a personal loan to maybe consolidate multiple credit card payments that have different interest rates into one lower interest rate option. So it's definitely worth considering. And again, everybody's situation is unique. So just see if it might be the best for you.
And while we got you right here, I want you to answer this viewer's question. We have one here that says, if we pay extra towards credit card, will it automatically go towards the principal, or do we have to specify?
Yeah, if you're paying through your credit card's app over the phone or just the traditional method of mailing it in, it is going to go towards your principal by default. But every credit card's different, and nowadays there's so many options out there in terms of like having maybe pay over time for some larger purchases and stuff to save on interest, that you want to make sure that if there's something you want to do, you find out ahead of time. And luckily, most apps and online portals have more options than ever before for doing that thing.
And Nathan, someone else said, my credit is frozen by my choice. I do not want to unfreeze it for even 5 minutes. How safe is it to temporarily unfreeze credit? And how quickly does freeze resume? And let me know if you need me to re-ask that question.
Yeah, so credit freezes, they're perfectly safe to freeze and thaw, as they call it, to open new credit. Because if you want to apply for any new credit at all, or get apply for a mortgage, apply for a vehicle loan, you're going to need to unthaw your credit in order to do that. If you're worried about security, one thing you can do is a fraud alert, which will basically require that any new credit opened in your name has to go through you first. You can get a phone call to approve it before anything is open. So that might be a way, if you're trying to be a little safer, that you can not have to freeze your credit, but can still have that protection.
Janae, I'm coming back to you. Life sometimes can bring the unexpected. So how can people financially prepare for things out of their control, specifically like a job layoff?
Definitely. So making sure that you prepare ahead of time. So let's not wait till the emergency gets to us. Let's go ahead and start preparing. So like I had said before, being able to cut back on your monthly expenses, and anything counts. $5 here, $20 there. Start building up that, what I call, in case you're a breathing fund or an emergency fund. So if you do experience a layoff, you of course will hopefully have your severance, and then you can go to unemployment, but you'll have that cushion behind you to kind of keep you afloat until all that money comes in.
And Nathan, when we were talking about loans, I wanted to go back because I also wanted to ask, how should people select the right personal loan?
Yeah, so there's so many different types of loans for different reasons. And like I gave the one example of a consolidation loan for multiple debts, but maybe a balance transfer loan is something that you want to do where you can get that lower interest rate locked in. So really, I can't speak to every option because there's so many variables out there, but I will say that everybody's situation is unique. And so for your own personal financial situation, if you're unsure of what is the best thing for you, talk to a financial professional, and hopefully they can help pinpoint exactly what will be the best thing to solve whatever financial problem you might have.
And Nathan, I have another a viewer question. This might go towards you. If you have $10,000 worth of credit card debt and you're unable to pay it, should you file for bankruptcy?
Well, all I'll say is with bankruptcy, it might seem like it's pulling you out of the immediate problems that you're dealing with, but the effects for bankruptcy are, in terms of your credit scores, are very long term. So it has to be a decision that, again, you want to speak with a financial professional before just deciding it yourself, and really see if there are options, because there are things like payment plans. There are, consolidation, like I mentioned before. all these different factors that might not erase the debt that you have, but be able to have you pay it down without damaging other parts of your financial situation. So really want to take a deep dive before you pull the trigger on that.
Got it. Thank you so much.